Welcome back, and joining us for a look at the day's market action is Cobus Potgieter from Southern Cross Capital. Thank you so much for your time, Cobus. JSE flat today, but the rand actually seeing some strength there at 18 rand 9 cents against the US dollar. Of course, I can imagine that the JSE is not really seeing any economic or company news that's really driving it at the moment. But just talk to him about the kind of maybe risk-on sentiment that we're seeing when it comes to the moves in the currency.
Good afternoon. Yes, look, I mean, the flat JSE doesn't paint the entire picture. We have to point out that resources are down more than 1.1%. And of course, the financials and industrials doing particularly well. Decent performance from the likes of Remgro, Shoprite, Investec. So despite some pressure on those resources stocks, both the precious metals and the industrial resources stocks, financials and SA Inc. in particular, having a particularly good showing, and I think the rand's relative outperformance against a basket of G20 currencies shows the trend. Perhaps we're seeing a little bit of inflow, and perhaps we've seen in the wake of that bullishness after non-farm payrolls in the US and the benign outcome of no government being the best government in France. The market's continuing that risk on trend, and some of those flows coming our way.
Well, let's delve deeper into those, because the jobs report, they did grow more than what markets had anticipated there. What's got investors so bullish? Is it zooming onto that unemployment rate?
Yes, absolutely. So it's difficult to say where the market puts most stock, but the unemployment figures tend to be a little bit more stable, and the payrolls are more subject to revisions. And then, even though the payrolls did come out a little bit ahead of expectation, the previous number, which was already a bit suppressed, was revised lower. So generally speaking, I mean, bad news is good news, I guess, when you're hoping for the Fed to start cutting. And in the wake of that particular release, the probability of two rate cuts before the end of 2024 has gone up to around 90% if we look at the forward rate agreements in the US. So essentially, traders are taking the view that by September we will see a cut, and before the end of the fourth quarter, we'll see another one. And if inflation remains benign, as the outlook is sort of shifted towards now, and that economy is not quite as robust. We've seen pressures elsewhere in terms of retail, in terms of fast food. The consumer does seem to be under a bit of pressure in the US. That does create the space to start cutting to support that economy.
Because actually I was about to ask if now that optimism that we saw after the US non-farm payrolls will actually filter through to the expectations for inflation, assuming that it will. But of course, we will be sifting through that on a Thursday, and also the producer price index on Friday. You spoke about the French elections, where it was mostly expected that the far right would take over. But yeah, as you said, no party at this point getting an outright majority, kind of leading to a kind of hung parliament situation. But those markets seem relatively calm.
Yes. Look, people say it was sort of an expected outcome, but the relative outperformance of the moderates, or the so-called liberals, Macron's faction, surprised the market. Let's be honest, Le Pen, who smashed the first round, came in third on this occasion. And what is effectively came down to people starting to care. This was the best election turnout in a French election since the 1970s, when Charles de Gaulle was still a feature. So on that basis, I think everybody slides to the left if they're too far right, and everybody slides to the right if they're too far left. And the far right nationalists will not go into a coalition with either of the other factions. And on that basis, markets have already calmed. And of course, we were also scared of a situation where the far left gains an absolute majority, which of course would have been an absolute chaos for the budget, given what they had promised. So now, coalition politics are highly unlikely in the French context, and they can't call another snap election for 12 months in terms of in the constitution. So on that basis, we're going to have a sort of a hung parliament situation where legislation will only be passed once it's been negotiated and at least two of the three major factions have agreed to it, which means that politicians are actually keeping each other in check.
Yes.
Nothing radical gets pushed through. And from the market's perspective, that's a reasonably predictable outcome and not as scary as either of the other two outcomes that has been priced into France.
Yeah, indeed. We know how markets value stability and predictability on that front. Well, let's get to your stock pick for today. Cobus, what are you choosing?
I'm going a little bit boring, but I mean, to me, it's remarkable that the stock is still so attractively valued. It's Mr. Price. Going at a PE of below 14 at the moment. I think if you like the SA Inc. thesis, if you like, if you think that SA Inc. stocks have underperformed and perhaps the long-term expected growth for South Africa is looking a little bit rosier given the GNU and potentially more friendly, market-friendly and economic growth-friendly policies going forward, it's a fantastic pick with a fantastic management team. One interesting catalyst, which I like to mention, is the SARS ruling, and one of the big external players, or two external players in the form of Shein and Temu, have essentially been sort of hurting Mr. Price specifically. I mean, Fushini's have had a lot to say about it, but the truth is they don't really compete against that market segment. But below a certain threshold, the authorities were simply clearing those imports for smaller packages at a flat rate, which is preposterous given that textiles attract in excess of 45% of duties. So now they will be pricing those appropriately, which means that price premium that Mr. Price is charging relative to those players has shrunk significantly to being somewhat negligible, given that their quality does tend to be better than those players, and that benefits them, call it on the lower end.
Yeah.
And other than that, of course, it hasn't really re-rated entirely, given how much the outlook has improved.
All right. Well, thank you for that insight and for your analysis on what has been moving investors' money today, Cobus. I really appreciate it. That was Southern Cross Capital's Cobus Potgieter.